Hello, everybody. Welcome back to our series designed to guide business owners through complex tax landscapes. Today, we're going to be focusing on a topic that's particularly relevant for high income earners: navigating additional Medicare taxes. Understanding this obligation is going to be important for effective tax planning. Before we get into this awesome topic, let me begin by introducing myself. So, my name is Shane Harris, and around here on these social media streets, I'm also referred to as Shane the Negotiator. And I help coaches, consultants, and service providers who are overwhelmed and lack guidance to achieve true financial freedom. And I do that by providing expert tax and coaching services. So, let's get into today's topic. Navigating additional Medicare taxes. So, last session, we spoke about high income earners and how it can affect your taxes when you are over certain thresholds. Well, today we're going to piggyback off of that topic and we're going to go into talking about that additional Medicare taxes. So, when you make money, the more you make, the more you spend. Of course, there are ways in which you can reduce your spending by implementing certain tax strategies. Okay. So, understanding the additional Medicare taxes. What is it exactly? Well, this was implemented to support the Medicare fund, applying an additional 0.9% tax rate on earnings that exceed certain threshold. So, for individuals that are single filers, this means income over 200,000. And married filing jointly, this is going to be 250,000. For business owners, understanding how this impacts you and your employees is going to be very important. So you hear what I said: for business owners, and how it affects you and your employees. Because as an employer, you not only have to worry about the additional Medicare taxes for your own income, you also have to monitor and be mindful for that of your employees as well. And stick with me, and I'm going to explain that. So, who are affected, or who is affected? Business owners, especially those in the high income bracket, needs to be mindful of how additional Medicare taxes affect both their personal tax liability and the obligation to withhold the tax for eligible employees. This is not just a concern for the individual taxpayers, but also a payroll consideration for businesses. So, withholding responsibilities. So, employers, that is you, if you are an employer of your business, you're responsible for withholding the additional Medicare taxes from the wages or the compensation that are paid to your employees that exceed that $200,000 threshold in a calendar year. It's important to review the payroll system to ensure they are set up automatically to handle this withholdings correctly, because there's going to be penalties for you if you're not in compliance. So that's why it is very important for the individual, your employees, to complete that W-4 form. And if they have multiple jobs, or if you are an employee someplace, and even if you're an employee of your own business, but you still work a corporate job or someplace else, if you have multiple jobs that requires you to have multiple jobs and you have multiple W-2s, you want to withhold the appropriate amount on that W-4. Because if you have one job that is paying you 150,000, you have another job that is paying 50,000, and you might have a business someplace that is paying you over 100,000, you are over the threshold, whether you are married filing jointly or if you're a single filer. You're over that 200, and you're going to be over that 250K, even if you combine the income with your spouse. So you have to keep that in mind. And that's why I make these educational videos, and I go live and I talk about these things, and my reels are circulating in my shorts, because many of you are making this mistake and it's costing you hundreds and thousands of dollars annually, because you're paying too much in taxes. You're not paying enough taxes. You're not paying enough Medicare taxes. You're overpaying Medicare taxes or whatever. So you have to withhold. So let's say I have a job and I have all those. So I said there's 150 here, 50 there, and another 100,000 someplace else. That's well over 250K. And as a single filer, it's over that 200K threshold. Okay. So I will have to notate on my W-4 that I have multiple jobs and I may need an additional amount withheld out of my paycheck to cover that additional Medicare taxes, because that job that you're paying 50,000, that you're going to be paid 50,000, a lot of Medicare is not going to be withheld out of 50,000 because that pay is a lot lower. Now the job that's 150K, it's going to withhold a little bit more Medicare taxes, but it's not going to hold anything in additional because it's not over. And similarly, for your business that has a net of 100K or more, you're not withholding any Medicare taxes with that, because when you go and you file, that's when you'll likely discover your Medicare taxes is over. So you have to keep monitoring your income throughout the year. And that's why it's important that you get it with a professional, especially if you are having multiple businesses, multiple jobs, and you are in that high income earner bracket. As you can see, the threshold for high income earner isn't very high, 200K. And realistically, in today's market, 200K is not a lot of money. It really isn't. However, when it comes to the IRS and FICA and Social Security and all that wonderful things, 200K is a lot of money to them, and they want you to withhold that additional Medicare taxes. Okay. So planning strategies. So tax planning strategies might include deferring income, increasing contributions to those retirement accounts as we speak so much of, or exploring other tax deduction opportunities to manage income levels relative to the thresholds. So each strategy is going to have its own considerations. So it's going to be wise to consult with a tax advisor. And I'm going to drop my link is going to be there, bit.ly/SD negotiator, for you to go ahead and get on there, get on my calendar, schedule that 15-minute consultation, or you can schedule the 15-minute chat, or you can schedule that consultation to sit down so we can discuss this and we can work together, and I can be your tax advisor to help you in these situations. As high income earners, you are at risk for overspending or not spending enough when it comes to your taxes and your Medicare. Okay. So let's talk about that case study. Consulting firm owner Jordan, that's going to be our company. So Jordan, who owns a consulting business, navigating the additional Medicare tax by adjusting his salary and bonus distributions to manage his income level effectively. He also opted to increase his 401k contributions, further reducing his taxable income. Now, I have had multiple clients of mine that come through and they fall into this category. So you have that business, or you may not even have a business. You may have just straight W-2 job. You have one job, maybe two. Let's just say you have a client that I have a kind of client that had one job, made over 400K from that one job. In addition to that 400K, the client received a bonus of 150K. So that's bringing them 550K in straight W-2 income, no business. So therefore, there's limitations to what they're going to be deducting, because as a W-2, if you do not have a business, you're not writing off but so much. It's only certain deductions you can take. It's only certain credits you can take. It's pretty straightforward. It's not a whole lot. Now, of course, they had retirement plans because they worked for, I think it was the city or it might be the state, can't remember, but they have retirement plans that they're paying into. So, of course, that reduced their 550K. It probably went down to like 400 and something thousand because of the retirement. But that's still a high amount to be taxed on. And whether they're filing single or they're filing jointly, they're still over that 200K and that 250K threshold. That additional Medicare tax had to come out. So they're going to pay into that additional Medicare tax, which they did. So in this particular case, like Jordan increased the amount to his 401k contribution. That employee didn't do that. However, that particular person had that bonus of 150K that increased their taxable income. However, they were smart and they had the additional taxes withheld out of that bonus because they knew they were already over the threshold with their income that's over 400K anyways. So when they received that bonus, they were smart enough and wise enough to go ahead and to go reach out to their HR and the payroll person and say, hey, I need you to take out the taxes from this bonus and also make sure you're withholding that additional Medicare taxes out of this bonus. So they did. So it brought their taxable income down a little bit lower. I think now they were down to 300 and something K. However, that's still over the threshold. So they have to work with me, which they worked with me, and we did some tax planning and some other things that we did, which I can't give y'all all the secrets. If you want to know all the things that I did for that particular client, well, if you have a situation like that, I will help you do some tax planning so we can bring your taxable income down a little bit lower. Because at that threshold, you're not going to be eligible for, even if you've married filing jointly, and I'm not joint, married filing, yes, married filing jointly, you're not going to qualify for earned income credit because just that one person is over the threshold. So there's no way, even if your spouse had no income, you are over the threshold for both of you collectively. You won't have any earned income credit. So there's only limited credits and things that you can get, limited deductions is available. Yes, you can itemize if you have medical expenses and things like that. But again, this is not bringing your income down significantly unless you have high things to itemize and so forth. Okay. So keep that in mind when you have these business your businesses. So now we talk about not employment, businesses. So I just gave you an example of that, of an employee with just a W-2. And now we're going to talk about you as the business owner. So you have, even if you do not have a job someplace, you don't work in corporate, you don't have a W-2 coming from anywhere else. If your business, even if you're a LLC, you did not take the S corp election or the C corp election, if you have not done that, in your net, meaning after all your deductions in your business, your net is over 200K or 300K or more, you definitely want to come see me, because we definitely need to change your business type to one of a corporation so that you can put yourself on payroll and deduct those wages. But let's say you're an LLC and you have this high income earning, this high net. You're not paying additional Medicare taxes throughout the year because you're likely not paying quarterly taxes. Or even if you are paying quarterly taxes, you may not be withholding that additional Medicare tax because you may not have been aware of it. You still have to withhold that additional Medicare tax, set that to the side, because you have to remit that you have to remit that in when you go and you do your estimated tax. When you file your annual taxes, you have to pay an additional Medicare tax, or else you will be penalized for that. So as business owners, even if you are not an employee of your business as yet, because you don't have that election type, you are still responsible for keeping up with the compliances and doing the right things in your business. I do help some of my clients that I have worked with that did not have that S Corp election or that C Corp election when they came to me, has high income earners. And a part of tax planning, we do some of these things to make sure we put them into place. So as you can see, here is one side as a business owner, no W-2, because you're not an employee of your business, high income earner, you have to withhold your own additional Medicare taxes. You have to pay your own estimated taxes. Then we have the employee who works corporate that may not have a business that has to withhold that additional Medicare taxes. Well, their payroll, whoever HR is or their payroll representative, they're the ones, the employer is responsible for withholding that additional Medicare taxes. But that employee is responsible for completing that W-4 form to let them know that they need to withhold additional amounts if their income is multiple different incomes in different places. You have to be proactive and tell them, because they're not going to know that by looking at your documents. The only way they will know is if that is your only job and all of the income is going to that one place, and they can see that you are over the threshold and they're going to withhold it. But if you have multiple jobs, multiple places, multiple businesses in other areas, there's no way for one person to know except for you. So you have to be proactive and speak with them, speak with the professional, i.e. myself. Come see me. That link is it's sitting right there across the screen, bit.ly/SD negotiator. Come see me, because I got you. I'm going to hook you up and make sure that you are in compliance. So in conclusion, let's start to wrap this on up. Properly managing the additional Medicare tax requires an understanding of its implications on your income and its course, the payroll. With strategic planning, you can mitigate its impact on your finances. So let's come on in close. Let's talk about some teasers for next week. So, coming up, we're going to be talking about maximizing education credits, a guide for business owners. We'll explore how business owners can benefit from educational tax credit either by themselves or their dependents to reduce their tax liability while investing in education. Now, we did speak about the education credits when we were speaking about claiming adult children on your taxes. We spoke about educational credits, but now we're going to speak about it again as relations to business owners and how to tie it in. Because even though I'll do lives and I'll do recordings and I'll talk about a certain thing, if you feel like it doesn't apply to you, you might not be paying attention. So I didn't mention business owners so much in the other one. I was mainly speaking about individuals. So the individuals would likely pay attention, but the business owners probably will not. So this time I'm tying it into the business owners because as self-employed, as entrepreneurs, there's benefits to you to having these educational credits. So that's why I'm going to be speaking about it on the business owner side. But I'm going to be restating some of the things from the last one, but this is going to tie it in to entrepreneurs. Okay. So in closing out, thank you so much for tuning into this session on additional Medicare taxes. And of course, if you found this information to be helpful, please like, share, and subscribe. Come on over here to the YouTube family. Stay ahead in your tax planning and ensure you're making the most informed decision for your business. So, see you on the next session, and I hope you enjoy the rest of your